What's up with my memory? All right. I got a viewer request to check up the Spy, some version of the SPX. I guess it follows it perfectly. And that's why I have my correlation. When in doubt, pop up the correlation coefficient. And there you go. So the Spy is the SPX. I don't quite often use it, but I see a lot of people referencing it. Just maybe like QQQ for NDX. All right, what's happening here, guys? February, how many days left? 2 weeks. February right now, a little doji, a little spinning top. Went up all the way here during the month. Sellers coming in, went down here, buyers coming in. Below that 12-month moving average, it's still declining 12-month moving average. Here I have set a breakdown level, and the more I look, this was a major level I was looking at. Was 26, 23. Where's the close here? Opened. Yeah, about 26.3. But the closer I'm looking at it, I think the breakdown happened. Whoa, right here. Stop moving. There you go. Or even gap down, went back up. Yep. So we had that monthly candle close that closed through both those levels. But right here, I believe that we had that breakdown from that top pattern. When we'll zoom in on the weekly, we're going to see it more. Maybe this was too embryonic. Probably some Ichimoku cloud defined support that's going to be down here on the weekly. And then we close down. So, sometimes when I say you pull back up and then there's that first level that's further away of a previous support and resistance, you might go through that. If that doesn't hold, then what holds is more immediately closer by defined tested support that's now resistance. And I think that's right where we are here at 27. It wasn't fit. I'm so not used to these three numbers. 27, 270, open, yeah, around those areas. So it's floating right about there. So this February month can be super duper important to see where it closes, guys. And targets for the SPY, short position, entry level. I love this little tool. Here's my sell stop. Where would my sell stop be? Worst case right here, right up here. Let's move it up here. And that's my first target would be right here. So 5-to-1 ratio. If this turns around, you buy it around this area here, under the 12-month moving average, below that horizontal breakdown line. And your sell stop, you'd put it all the way up here, above this previous candle here of November. And that top is high, 281.22. And your sell stop will be right here, these 2015 breakout levels, previous support, previous resistance, now turn support. You're probably going to hit that here. And after that, you'll do the classic bounce back up to previous support and resistance, go back down, test it, 12-month moving average, go downwards. So that's the first target. But my further away, bigger target is breakout levels 2012 all the way down here. So that's a risk to ratio. I love that. You risk 1 to win 1183. So that is very good. And even here on the shorter term, risk 1 to win 5. That is pretty sweet risk to reward ratio, guys. Okay. Let's try that. Destroy. And you are gone. All right. Let's go on the weekly. SPY versus SPX. Cannot compare it to itself. This is our baseline. Awesome stage 2 on the weekly. Volatility, big red candles, big warning sign, especially the close here. The 30-week average still angling upwards, so brought the price action back up. But that was definitely a sign to not be there anymore. No matter what happens after this is a big warning sign. It could have tumbled down. It happened to go up. But with stand system, you never exit at the top and you never enter at the bottom. What you do is you ride the wave here. So that extra thing, that's fear of missing out. Say, I would have missed that. Don't reinforce those emotions, that thought pattern. The earlier you sell, it's a profit that you lock in. All right. Sideways move, went up a little bit. After that, went down hard, and below, price action below 30-week moving average. Ichimoku cloud doing its thing, holding it up. And after that, when you start having price action deeper, we're starting to get a declining 30-week moving average. Ichimoku cloud starting to flip over. So in the future, we're defining eventual resistance. The support almost none anymore. And now we're at critical point. We're right at that monthly defined breakdown level. Right below the 30-week moving average. So we have the 12-month moving average. We busted through, but we're sinking back within it. 30-week moving average, we just touched it and came back down. That 12-month moving average also trying to drag back down that price, making sure that you close below it. And if we do, then one more red candle, especially if we could close below that magic number here. 262. After that, I think we're going down back here to test these lows. And that's how you do it, guys. 30-week moving average, going downwards. Oh, testing, bouncing up, lower highs. I want to check how much versus the percentage of stocks above their 50-day moving average, above their 200. See, S5 TX 200, FI 50. All right, let's look at the price action. Still haven't done lower, still doing lower highs. Oh, as the price action starting to turn, we have the RSI really starting to turn over here. So we're starting to consume that bearish divergent that's accumulated since late November. And on the 200-day moving average, guys, wow. So for the quantity of stocks above their 200-day, stop denied right below 50, the halfway mark, 49.50. Was this a little higher back then? 49.90, 49.70. So this line, that's me trying to quicken, bouncing out off that. So this is the gas tank. So here is the slingshot. So that's going to go hit down here. Then we're going to start going in the oversold territory. So by that time, 200-day, 50-day, by that time we might maybe here testing that. And again, hitting 200-day or not, the 30-week before, then testing it again. So that's going to give us energy to go down here. The 200-day, they're going to be more and more consumes. After that, bounce back up. Either create some bearish divergence or just reinflate. And then after that, when it gets in these higher levels, then continue leg down. And that next leg down is going to bring the quantity of stocks in their 200-day moving average, below their 200-day moving average. So the quantity above, shrinking. So just as this was the power zone when you're in an uptrend, what I want to show you is when you're downtrend, you want to stay here. You want the quantity of stocks below their 200 to really stay there. And let the 50-day, the quantity above their 50-day fluctuate up and down. This one followed pretty much in synchronicity, and give you other indications either through bearish divergence, that the price action could be going back down. So that is what I'm looking for right here. Get some more details. Where is my... So distance from the 12-month moving average, we saw it before, super duper close. Strike zone, power zone right here, starting. If you could turn down, that's a great low risk, high reward environment because you have that 12-month moving average protecting you. Guys, it's starting to turn around the corner. We just need a weekly close, a red weekly close on the weekly, and after that redo the weight of evidence, recheck through everything. On the fast stock, no. Ooh, starting to approach the power zone right here, but not quite there yet. So let's see, there's no divergence. Let's see if this deflates and goes back into oversold territory. And on the monthly, all right, so remember again, the monthly, that's the same thing. That's, you want to stay in the overbought when you're in an uptrend. And right now it was going back up. November, December going back up. So let's see, it seems to want to start turning over, but I really have to wait for February to end. And let's see if we continue back. Just as in 2008, we had to pull back up on that last bounce before the final drop. Well, these two here. And here we have the pull back up. So maybe this is what's happening right here. Guys, man, just wait. Patience. SPY, very, very close. So don't jump the trigger too early. Make sure it starts turning over. And you have the weight of evidence still behind you guys. All right. Thanks for watching.